In today's video, we're going to have a look at the IMF and the feud going on between the Treasury Secretary and the Fed, as well as how vaccines might shape the US dollar. Hello and welcome to another acysecurities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is how vaccines might actually shape the US dollar. Coronavirus has obviously gone around the globe, but now that we've got a vaccine on the way, where might it actually go? Well, one of the first levels of thought that I have about the US dollar and vaccines is that it's likely going to see the US dollar decline in value. The reasoning behind this is that usually we think of the US dollar as a stable, safe sort of area. So when people are concerned about the risk environment around other economies and of course what's going on in other asset classes, they migrate their money towards the US dollar, towards gold, towards bonds, and towards a few other considered safe haven assets. With the advent of the vaccine coming into play, it might mean that we see people moving those funds out and taking on more high-profile risk asset classes instead. Moving on from that, the other side that might lead to or contribute to the idea of the US dollar declining in value is as recent as this week, we've gotten news that says that the euro has taken over the dollar in terms of international payments this year. A large portion of this is really being driven by the advent of what's happening with the US economy and how unstable it's been, particularly with the US election and the spread of coronavirus. So instead of holding on to US dollars at some of the other central banks around the globe, people are starting to use the euro just a little bit more. Is it the start of a decline? Who knows? But it is certainly the first time we've seen this sort of an event occur in at least the most recent modern history. Now, moving on from currency talk, we're looking at the IMF. The Bank of Central Banks are looking at seeing a recovery starting to derail. Now, of course, they've not said it's derailed entirely just yet, but they are concerned about a number of elements that are going on. They've already noted that there is uncertainty towards the recovery and that risks are still sitting very, very high for a recovery effort to continue on the same momentum that it's got. It's also been signaling that the recovery efforts are losing that momentum. And some of the things that might contribute towards that are that we're not seeing stimulus in the fourth quarter for the US, but a variety of other factors, presumably coming from how elevated asset prices really are, particularly on more of the usual fronts that we see when it comes to commodity prices. Of course, the recovery efforts are also being really uneven. It doesn't take much to look at. You can look at Australia as a leading example where we have some states that are charging full steam ahead in first gear while the rest are sitting in neutral or perhaps even stopped. So there is a very uneven effect. It is likely going to leave some scars on the economy for an extensive period of time, and it's going to require a lot of support to keep this going. Likely, we're going to have to see the recovery of the pandemic and the pandemic well and truly in our rearview mirrors before we can even consider tapering off some of the supports from fiscal and monetary policy. We're also seeing a little bit of a feud going on between monetary and fiscal policy. More particularly, we're seeing this feud arise between what's considered to be a very stable relationship between Treasury Secretary Steve Mnuchin and the Federal Reserve Chairman Jerome Powell. Of course, between the two of them, there's about $200 billion that they're really discussing. Treasury Secretary Steve Mnuchin wants the money to come back, whilst Fed Powell is saying, well, hold up, that's meant to be a little bit of our balance book. Now, the issue that arises from this, and this is something that we see a lot when we look at Turkey's situation, is that they're not meant to have both houses working in tandem together. They are meant to be separate for a reason. We can't have politics dictating what happens in fiscal policy. They are meant to be separate so that we don't get instances where we get politics affecting the monetary policy. So if this scenario does continue to play out and we do keep seeing a push towards money coming back to the fiscal sides or back towards the White House, then that would indicate that we are seeing a little bit of autonomy get reduced from what the Fed may actually have. Now, looking at the news ahead of today, there are a few different things to consider, but they are all relatively low impact. We have pound retail sales, Canadian retail sales. We're also going to be hearing from FOMC member Kaplan and much later in the session, Euro consumer confidence. Now, we have heard a fair bit in the most recent weeks on vaccines. We've seen this rotation. So going into Friday this week with markets being a little bit mixed, I would be hesitant to give a direction on which one is going to give us the most impact for news, considering they are all quite substantially low. And we know what the situation is. in the UK already, Canada as well. And so really the bigger impacts are probably going to be coming from the FOMC, likely because of that debate that's gone on, or the feud that's gone on between Mnuchin and Powell. Otherwise, it's going to be interesting to see the consumer confidence reports just to get an idea of how the European Union is doing and how people are feeling about business, the economy, and spending money over the next couple of months, particularly with the spread of coronavirus. Now, if you do have any questions from today's video, please feel free to shoot me an email at talktoal@acy.com. Of course, all of my other socials are available, so please feel free to hit me up there as well. Don't forget to also like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.